OpenAI just filed for an initial public offering in complete secrecy. That's right, the company behind ChatGPT quietly submitted confidential paperwork to the Securities and Exchange Commission, and nobody outside the company's inner circle saw it coming. This isn't a public announcement splashed across TechCrunch or a press release celebrated on social media. It's a hidden filing that reveals OpenAI's intention to go public. And it lands just weeks after their rival Anthropic, the company founded by ex-OpenAI researchers, made their own IPO plans public. Here's the thing that matters: confidential filings are a game changer. When a company files confidentially, they get to test the waters with regulators behind closed doors before the media frenzy and investor pressure kicks in. It's like previewing a movie for critics before the world premiere. OpenAI's valuation is rumored to be somewhere north of $80 billion, making this one of the most anticipated tech IPOs in history. But the real kicker, this isn't just about money or ego. Both OpenAI and Anthropic filing for IPOs signals that the age of private AI dominance is ending. The AI arms race just went public, and everything about how these companies operate, what they disclose, who owns them, how they are accountable, is about to change completely. And this is where it gets interesting. Let's clarify what a confidential IPO filing actually is, because the word confidential sounds mysterious, but it's actually a strategic tool. When a company files confidentially, sometimes called a CNMR or confidential non-public submission, they are saying to the Securities and Exchange Commission, hey, we are planning to go public, and we want to chat with you privately before we announce it to the world. It's like a dress rehearsal with the referees before the big game. The SEC reviews the filing, asks questions, and the company can make adjustments without every competitor, short seller, and activist investor reading every line. OpenAI could be testing what regulators will allow them to disclose about their AI models, their training data sources, and their safety practices. That's crucial because right now, there's no playbook for how AI companies should report to public shareholders. Should they disclose their model architectures, their training budgets, their safety incidents? Nobody knows yet. Anthropic took the public route. They announced their IPO plans loudly and let everyone watch the process unfold. OpenAI's taking the quieter path, and that tells us they might have more sensitive information they want to negotiate with regulators first. Both approaches are legal and smart, but they show very different philosophies about transparency. Anthropic's saying, we are confident enough to do this in the open. OpenAI's saying, let's get the rules sorted first. Here's what the headlines aren't telling you. OpenAI and Anthropic aren't filing for IPOs because they suddenly need cash. Both companies have raised billions in private funding already. OpenAI's pulled in over $10 billion from Microsoft alone. Anthropic's backed by Google, Amazon, and Salesforce to the tune of several billion. So if they've got money, why go public? The answer is control and staying power. Going public is about locking in power at a moment when you're on top. Right now, both companies are the undisputed leaders in generative AI. Their models, ChatGPT and Claude, are the benchmarks everyone compares everything else to. But that dominance won't last forever. DeepSeek is rising in China, Meta's open-sourced Llama, Google's Gemini is improving. In 3 years, 5 years, maybe they won't be the clear leader anymore. By going public now, while their valuations are sky-high, they can lock in shareholder value and capital for the next phase of competition. It's also about employee retention and recruitment. When you're private, your stock options can be worth billions on paper, but you can only cash out during rare sale windows. As a public company, OpenAI employees can sell shares on the open market immediately. That means the company can compete for top AI researchers and engineers against anyone in the world. Here's the twist nobody expected. Going public also gives them a shield against regulation. When you're a private company, regulators can move faster and more aggressively. When you're public, you've got shareholder lawsuits, disclosure requirements, and the entire financial industry watching your every move. It's messier and slower, but it's also harder to shut down. But here's the kicker. When OpenAI and Anthropic go public, the AI industry transforms overnight. Let's walk through the real-world impact. First, transparency explodes. Public companies have to file quarterly earnings reports, annual 10K filings, and detailed risk disclosures. OpenAI will have to tell shareholders and regulators about their compute costs, likely in the tens of billions per year, their revenue model, and their path to profitability. Right now, nobody outside the company knows if ChatGPT is actually profitable. Once they are public, everyone will know. Second, accountability kicks in hard. If OpenAI's models cause harm, say, a security breach or a violation of someone's copyright that leads to legal liability, shareholders can sue the company and the board. That creates massive incentive to get safety and compliance right. Third, the funding landscape changes. Right now, venture capital and sovereign wealth funds are the only ones betting big on AI. Once these IPOs happen, every retirement fund, pension plan, and individual investor in the world can own a piece of OpenAI or Anthropic through their brokerage accounts. That's trillions in potential capital flowing into AI, which means faster hiring, bigger compute clusters, and more competition. Fourth, regulation gets real. Regulators are watching these IPOs closely. Once these companies file detailed disclosures, governments will have a template for what to require from other AI companies. The European Union's AI Act, the upcoming US framework, they'll all reference what OpenAI and Anthropic disclosed. And that's just the beginning. Here's where the strategic dynamic gets fascinating. Anthropic announced their IPO plans publicly in May, right before OpenAI's confidential filing. That means Anthropic gets to set the narrative first. They're telling the world, we are profitable, we are responsible, we are ready. OpenAI's response, going confidential instead of public, is calculated. They are saying we need more time to prepare. This is a game of chess. Anthropic's move is aggressive. Go public loudly. Get the best IPO terms, establish yourself as the trustworthy AI player. OpenAI's move is defensive but smarter long-term. Negotiate with regulators first, then go public with maximum flexibility. Think of it like two companies in the same market. One races to launch their product first with fanfare, the other takes time to perfect it and launches when conditions are ideal. Both strategies work, but they lead to different outcomes. Anthropic might raise more money faster, but face more regulatory scrutiny. OpenAI might have fewer surprises, but could get outdone in the narrative. Meanwhile, other AI companies are watching and calculating. Google has Gemini, but they're already public, so they don't get the IPO bump. Meta's invested heavily in AI, but they're also already public. Microsoft backed OpenAI and owns 49% of the upside. They'll see massive returns. The smaller players, Mistral, Scale AI, Together AI, they are scrambling. If OpenAI and Anthropic are worth $80 to $100 billion at IPO, these smaller companies need to move fast or get acquired. The entire AI venture ecosystem is holding its breath. And this is where things get complicated. These IPOs aren't just business news, they're a pivot point for the entire artificial intelligence industry. When OpenAI and Anthropic go public, they're betting their entire future on the idea that AI is here to stay and will generate massive returns. That's a huge signal to the market. It says, this isn't a hype cycle. This is infrastructure. Right now, there's legitimate debate about whether AI will deliver on its promises. Will large language models actually replace knowledge workers? Will they drive trillions in economic value? Will companies actually pay for AI services at scale? Public markets demand answers to those questions. Anthropic and OpenAI have to prove it. That pressure drives innovation. When you're private, you can take risks and lose money for years. When you're public, you need to hit revenue targets and show a path to profit. That means both companies will aggressively commercialize their technology. We'll see more API pricing tiers, more enterprise sales, more vertical-specific AI products. The AI gold rush isn't over, it's accelerating. But there's a flip side. Going public brings regulatory and legal risk that private companies don't face. OpenAI's been sued over copyright issues, training models on internet text without explicit permission. They've faced questions about safety and bias. As a public company, every lawsuit becomes a shareholder concern. Stock prices could swing on regulatory news. That's a major pressure on the company to get governance and safety right, which is actually good for society. But here's what most people miss. The real battle isn't between OpenAI and Anthropic. It's between the United States and China for AI dominance. DeepSeek's making moves in China, and they are advancing fast. These US-based AI companies going public gives them capital and legitimacy to compete globally. But that also means geopolitical tension around AI will escalate. Every AI breakthrough could trigger export controls or regulatory backlash, the part most people overlook entirely. If you're watching this as an investor, employee, or just an AI enthusiast, here's what matters and how to track it. First, watch the SEC filing timeline. OpenAI will eventually file their public prospectus. That's the detailed document every IPO requires. When that hits, read the risk factors section. That's where companies legally have to admit what could go wrong. OpenAI will probably disclose risks around regulation, compute costs, competition, and safety incidents. The prospectus also reveals revenue, which nobody outside the company knows right now. Second, track the IPO pricing and valuation. When does OpenAI go public and at what price per share? That valuation signals how confident the market is in AI's future. If they price at $150 to $200 billion, that's betting heavy on AI dominance. If they price lower, it means investors are nervous. Third, monitor what they disclose about their business model. Do they rely on subscriptions, API fees, or enterprise licensing? How much of their revenue comes from ChatGPT Plus versus commercial customers? That tells you if the company's actually built a sustainable product or if they are still dependent on hype. Fourth, watch for copycat IPOs. Once OpenAI and Anthropic go public successfully, Mistral, Scale AI, and other AI companies will rush to follow. The IPO market will be flooded with AI companies, and that's when the real competition separates the winners from the hype. Finally, pay attention to what governments do. Will the European Union block these companies from operating? Will the United States impose export controls on AI models? Will China retaliate? These regulatory moves will shape the entire AI landscape. Here's what this means for you. OpenAI's confidential IPO filing is the moment the artificial intelligence era officially went mainstream. It's no longer a Silicon Valley experiment funded by venture capitalists who believe in the dream. It's becoming a public company backed by millions of shareholders who demand returns and regulators who demand accountability. That changes everything. The IPO race between OpenAI and Anthropic signals that AI is no longer about proving the concept works. It's about who controls the market and reaps the rewards. Both companies are betting their legacies that they can stay on top while navigating a completely new landscape of public scrutiny, regulation, and shareholder pressure. For you as a viewer, this matters because it determines which AI companies survive the next decade, which ones get the capital to compete, and which ones stumble under the weight of being public. It also signals to the market that AI is worth betting on, which means more capital flowing in, faster innovation, and more aggressive commercialization of AI technology in every industry: healthcare, finance, manufacturing, education. Whether that's good or bad depends on how well these companies execute on safety, fairness, and responsible deployment. The next chapter of AI isn't about research breakthroughs or model scaling. It's about business strategy, regulatory navigation, and shareholder value. OpenAI and Anthropic are about to find out if the technology that captured the world's imagination can also make money at scale. And the rest of the AI industry is watching to see if they pull it off. Follow for daily AI news to stay on top of these developments as they unfold. From the IPO filings to the first earnings calls to the competitive moves that'll reshape the industry. This is just the beginning.